Yo, what's up, everyone? It's your boy, Looney. We have a lot to talk about today. We just witnessed a massive market crash after hours. News broke out that Israel attacked Iran, and now everything is tanking. This is the kind of black swan event we talk about, and this is the unexpected kind that hits hard and fast. I'm also going to be talking about a position that I rolled that a subscriber actually wanted to see. And then we're going to go over some of my credit spreads and my overall strategy. But before we get into it, quick shout out to the Discord. It is free to join. And then I also have a paid membership. It is $8 a month. You get access to trade alerts, one-on-one coaching, selling options course. I do giveaways and more. You can check it out. All links to it will be in the description. But let's talk about cash strategy and volatility. I have been saying this for weeks now, that cash is a position. Right now, I am holding $7,200 in cash, and this is exactly why. And I couldn't really expect some kind of event like this, but I did realize that we were seeing this sort of bubble feeling where everything was a little overvalued or overbought. So pullback was due. Now, this kind of event was very unexpected, and this attack is very crazy, but this volatility is back, and VIX is probably going to spike tomorrow. And prior to this, I wasn't forcing trades during the recent bull run or the bull weeks that we had. Instead, I've waited for this kind of moment to deploy capital strategically. Again, I was not waiting for this exact moment, but some kind of pullback moment. And yeah, I still have capital deployed. I have a few puts that are locked up. So this Mara $12.5 put, and I believe I have two more Mara $14 puts that are in a position where they could get assigned. We are seeing Mara at $15, so there's a chance those get assigned, and then an $8.5 Riot put. But again, I am okay with getting assigned at these prices, and I also have a lot of extra cash in case we are seeing more pullback or more direction to the downside. And I'll probably sell more puts, perhaps doing put credit spreads. I was doing call credit spreads recently, and I had a lot of videos on that, and I'll get into how they're doing. But put credit spreads, and then if we get into months or we're seeing massive volatility, perhaps buying calls. So pretty crazy. Right now, I am not going to go all in again. We need to see how this plays out. But yes, I am being prepared to deploy cash now that we're getting this sort of event. Also with that, let's talk about that one covered call that I rolled today. And I did actually close out a sell put today as well for some profit. Let's go over the sell put first because it is the easiest to explain. And today I closed this $14 put just because I was really just missing out on $10, and now I have that capital freed up for a situation like we just saw today. So now I could deploy that cash again at a lower strike price, locking up less cash, and the premiums are a lot better now. But yes, I realized the gain on that one. But on the other hand, I realized the loss on rolling my covered call. So if I go to this $9.5 call, I had two, I rolled this one, and if we go down here, it's a realized loss of $250. So yes, when you roll, there is a chance that you do have to pay. And that's what happened in this situation. It was because it was deep in the money, right? It was deep in the money. But again, I'm okay with this for a couple reasons. I don't want to sell Riot right now. I don't want to sell it at that 9.5 or 8.5. At 9.5, I still don't want to sell it. I probably still will roll it. And also, stocks can't just go up forever. I mean, they can, but really, I'm not prepared to sell them at this price range. So rolling them was the best decision I could have made in this moment. Yes, I did have to pay $250 to do this sort of trade, and it's really just the cost of doing covered calls. You do miss out on some gains, and this is exactly what it is. But we are seeing this pullback, so this actually might be a smart play overall. And this covered call, if it expires worthless, I will realize this 222, or even if it goes lower, I will get more, 268. So a lot of room to grow on this covered call. Again, I did have to pay 250, and we might see a better realized loss or a net realize on these two. But if we go to my realized gains, let's see how I'm doing on the week. Because on the week, I think I am negative, very barely negative, but you could see how one loss can wipe out all your gains. That's why consistency is key and not over leveraging, which I don't believe I did because I still have cash available to do more cash secured puts. But yeah, in this one, I had to pay 250. And again, on the month, I'm still up 36%, and then year to date up 55%. So this is just a small hiccup for now, especially I do have a lot of cover calls that need that sort of space like this SoFi. SoFi is now dipping a lot more. Now let's also look at my spreads. Because of today's crash, my covered calls and my call credit spreads are looking really great now. We're going to see when the market opens, but just today I'm up $300 from my options, and not because I went risky with my options, but it's because I was very strategic. I was very opportunistic when choosing what kind of strategy I was doing. And that's why I was disclosing that I was doing credit spreads, is because I saw that we were due for a pullback. Obviously, this was unexpected, but having this pullback was likely just because we've seen this bubble and this overbought. So now my Mara 19 and $20 call credit spread is probably going to open up green tomorrow. And a lot of these, all these other ones that are credit spreads are going to do well. And my overall covered calls as well. These are going to do well, probably unless we do see a pullback towards the upside. Not pullback, but a direction towards the upside. Unfortunately, I think I have one put credit spread on HIMS. This one still has some room, but there is a chance this one goes into the red, and then we'll have to manage that one. But right now, this one is also looking just fine. I don't want to speak too soon, but this is one of the benefits. So because of these spreads, I am betting that prices would stay below these certain levels. And I wasn't really expecting them to crash. If I was expecting them to crash, I probably would have bought calls. So I wasn't betting for the crash, but I was simply just prepared for a drop. And now they're going way below these levels. So that's the benefit of playing defensively before the storm hits. I wasn't trying to predict this news. I was just looking at how overbought everything was. So tomorrow, I will be watching how the market reacts. If VIX spikes to 20 or above, I will likely start selling puts again, but slowly. I'm not going to go all in, but this is why you just stay ready. Not just for the good days, but for moments like this. If you want to see exactly how I manage these trades live, hop in the Discord. It is free, and then there's a premium where you want deeper breakdowns and alerts. Stay safe out there, stay patient, and let's navigate this market together